Celsius troubles UST collapse and the UST collapse may help crypto long term, FS Insight says. So as you guys know, we had the UST collapse. We've had Celsius basically pause their withdrawal, swapping, etc. We've been talking about it all week. It's not helping crypto out. We kind of have an idea of why this is happening. Short story, we have a bunch of staked Ethereum that is being represented kind of falsely by wrapped tokens and being sold out to the general public. And then the general public is ditching, or even large financial institutions too, like Three Arrows that we're going to talk about here in a second, the whales. And the whales are dumping the wrapped version of staked Ethereum, and it's causing a depegging. The depegging hasn't resolved itself. If you want more details, of course, we talked about this in detail yesterday in the morning show. So definitely go wrap back around and check that out. But this isn't looking great, right? But we do have some positive stuff coming out of it, possibly. The firm sees good buying opportunity now for Bitcoin. The combination of macro headwinds and over-leveraged yield strategies has resulted in the forced selling of cryptocurrencies in the last few days, wiping out more than $200 billion in value from digital asset markets. FS Insight says in a report on Tuesday, the takedown of Terra UST and Celsius is long-term constructive for the industry, Sean Farrell, head of digital asset strategy at FS Insight, wrote in a report. Last month, Terraform Labs, two tokens, Terra USD and Luna, collapsed, and last week, crypto lender Celsius Network paused all withdrawals, swaps, and transfers because of the extreme market conditions. Such public displays of ignorant capital destruction are often overlooked in the traditional finance industry or take a very long time to unwind. This is another important part that I wanted to bring up. With the transformation to the digital age, specifically as it pertains to finance, which is what we are dealing with when we speak about cryptocurrency, everything is going to begin to happen much quicker. These transformations, things that are changing, the cyclical nature of finance begins to be accelerated as opposed to waiting decades for basically anything to be realized within the market as it pertains to finance. With cryptocurrency, we're talking about cutting that time in half or even more, really somewhere between like down by a fifth, right? We're talking about huge sways and changes and reactions in the market that happen within 2 years instead of 10 years, that type of thing. And I think that's important to bring up. The note said, although it noted that crypto markets have the benefit of iterating and improving at a more rapid pace, hence what I was just describing. In regard to Celsius, if yield generation strategies are too good to be true, that is because they probably are, FS Insight said, adding that crypto lender was notorious for promoting risk-free yields on client assets that required huge amounts of leverage coupled with risky and illiquid staking mechanisms. Hence, of course, your stakes, the liquidity between ST, ETH, and Ethereum, as we've seen it now, where we have 80% of the liquidity in ST, ETH. It's very obvious that these types of things are risky. We've talked about them before. I think like early on in this bull cycle, some of there were examples of, different companies going around and talking to even cryptocurrency miners like myself and getting sponsorships to get you to deposit your mined ETH into them to earn an additional percentage or yield on them. The problem is that when you lock them up with them, like BlockFi, for example, you ended up in a position where you were no longer decentralized. And even back then, I kind of said, hey, you're not going to get as much adding liquidity on something like Uniswap, but at least you control those keys. And I stuck to those guns, and I'm glad that I did, because obviously this is where we end up now. I did do one advertisement spot with BlockFi, and then we kind of talked about it a little bit more and decided not to move forward. And a lot of that was because when I looked at it on the base principles that I have surrounding cryptocurrency, I said this wasn't a good idea. And that does go back to kind of like one of these, It's a very simple quote that I just want to remind you guys, and hopefully you remember it in a bull run. But like, if you stand for nothing, you'll fall for anything. And if you are based in the actual development of Bitcoin itself, if you are focused on the purpose of it from the get-go, you're going to be a lot less likely to fall for things like this that put you in a poor position in a bear market. The difference between assets that are owned and that are held in custody becomes evident only during times of market distress, the report said. And many Celsius users who thought they owned their assets found themselves unable to withdraw this period of increased market volatility, FS Insight added. In a tight environment, leverage becomes a dangerous double-edged sword that can strike when you least expect it, the note read. FS Insight says it is still constructive on crypto prices in the second half of the year, and this is the time for medium to long-term investors to consider allocating Bitcoin more aggressively. And so, like we've talked about before, and obviously they're just confirming all of this, the opportunity is now, right? You have the most opportunity right now. The problem is just purchasing Bitcoin in a time like this can be extremely difficult, especially for the middle to lower class, or at this point, just put us all in the bucket of lower class because prices are accelerating so high that it's going to be extremely difficult for us to even, middle class to even pay and cover bills, even in first world countries like the US, just to be completely frank. Once again, I want to just remind you guys that like the importance of basing yourself within the principles of cryptocurrency as it pertains to transacting between individuals without the interference of government, to be able to transact freely, to be able to control your keys, which is a huge part of that, to avoid centralization as much as possible wherever you see it and shoot it down, is going to be the most constructive thing you can do. And that is really where we stand. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.